Huge 30% inflation for furniture and electronics. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's look at an article from news.com.au which is warning us of big price hikes from Harvey Norman. Big bad Harvey Norman. No. Guys, this is inflation. This is inflation starting to manifest in imported goods. Let's go through this, because they're going to be. I think I saw a hashtag ban Harvey Norman. I mean, people don't like Harvey. I don't know why. You know, I think it's just the whole jealousy thing here in Australia, the tall poppy syndrome. You succeed in Australia and they tear you down every bloody way. Okay? I mean, sure, he sells knickknacks and things, and the furniture's overpriced, but people like it. They used to have one of the few places I could get computer games back in the day on the Gold Coast, guys. So Harvey Norman warns of big price hikes. Harvey Norman boss signaled at the end to cheap electronics and furniture. Well, maybe we're going back to the good old days when everything was so expensive here in Australia. Here's the thing. Everyone is a globalist at the checkout. Everyone is a globalist at the checkout. If not, then Dick Smith's Australia brand of substandard Vegemite and stuff would be doing much better, but it completely doesn't exist anymore. And he got shitty because people prefer Aldi to his knockoff brand. Okay? That's all it is. Everyone's a globalist at the checkout. They want the cheapest stuff. They want their money to go the furthest as they can. You'll have people who are calling for manufacturing in Australia, but then they also call for tariffs. So when you impose a tariff, that's not the other country paying for it. That's us. That's us, the working people. We have to pay for it. It's a tax to subsidize inefficient or businesses that aren't competitive here in Australia. Maybe some of the overseas businesses have unfair advantages that we can't compete with. Well, then what we need to do is we need to reduce the regulation, costs, and burden that we place on businesses here in Australia. Maybe, just maybe, there's one sector we could discourage or stop incentivizing. You know, housing, where everyone is diving into that. Maybe we could kind of discourage or not encourage all the rampant investment in that sector so people start to, well, consider putting it into businesses. Can't blame them for not. So let's go through this. The furniture and electronics giant has said consumers could be forking out as much as 30% more for goods in coming months. In months, a 30% increase on your computer, on your laptop. Nowadays, I mean, the last machine I bought, which is funny, the one I'm recording on here, I bought a 3060 graphics card, you know, because I wanted to upgrade. As an architect, I need to do the high-quality renders and animations. Now, I trialed out a new piece of software. I use Lumion for my animations. And I thought, okay, I've got the 3060. It has to be faster than my old 1080. No, it's not. The 1080 is actually just that little bit faster than the 3060. I should have got a 3080. Oh, well, that sucks. But anyway, it just shows you how our costs are going to go up. Because I spent a good $6,000 building a rig for work. I need it. Remember when computers used to be a lot cheaper? Imagine that 30% up on there. No, that's taking it up to $8,000. Harvey Norman boss Jerry Harvey has warned the cost of electronics, appliances, and furniture could rise between 5 and 30% as shipping costs skyrocket. Let's jump over here. This is the Freightos Baltic Index. This is Global Container Freight Index showing you the costs of shipping. And if we see here, the current freight FBX is at 9,789. So that's right up there. That's been high for some time. Shipping costs are getting expensive. This is what it used to be, guys. $1,400, $2,000, and it's just shot up and it's skyrocketed. The highest is here, $18,000, and this is from the east coast of China to the east coast of America. And there you go, $18,020. Shipping costs are getting expensive. Container costs, container shortages or logistic issues are being felt in the costs of goods and services. Now, Australia, we are a country, and I will bring up the Observatory of Economic Complexity. I know we haven't seen it enough recently. Some people have been complaining. I'll sign in. Okay, just to remind some people how much of our economy is imported. Like everything in front of me, I've got 4 screens in front of me. I've got this microphone. I've got the other microphone. I've got, probably even my Stein. It's all made overseas, guys. So if we jump over here, we can see our economic... Sorry, the weather's a bit cold. Our economic complexity is at negative 19 or 0.19. And we scroll down here, we can see historically, these are what we're exporting. These are the countries we're exporting them to. But here, this is everything that's imported here in Australia. Now, all of that is going to get more expensive. Shipping costs are going to drive that up. Tariffs to protect local industries are going to drive up the cost of these things. And the dollar falling, we'll jump to trading economics as well, that is going to have an impact on the cost. Where are we seeing it here? There we go. We're at 72 US cents, so not too bad. But if you want broadcasting equipment, packaged medicines, even gold we're importing. So, yeah, there we go. Let's see, where's all that broadcasting equipment come from? There you go. 60% from China. So, the 82-year-old, who is the retailer's executive chairman, said the price of shipping and logistics had soared, resulting in products becoming more expensive. Shipping containers used to cost $2,000. Now it's $12,000. And the price on your lounge goes up by 10% to 20%, he told the Sydney Morning Herald. You name it, no matter what product you come in to buy today, it's dearer than yesterday. And it will be dearer again tomorrow. Prices are going up 5, 10, 30%. Huge delays in getting stock from overseas, such as China, was also causing headaches. But the retailer revealed the company had set up 50 new warehouses around the country over the last 18 months to hold more stock. Harvey declared the days of ultra-cheap electronics and furniture were over, according to the Australian Financial Review, but said customers could still nab a deal. Customers are coming into our stores at the moment, and we've still got a lot of products that are priced a lot cheaper than what we can buy it for at the moment, so we can deal a bit on price, he told the AFR. Harvey Norman experienced its first drop in sales and earnings since the start of the pandemic, with total sales for the 6 months to the end of December down 6.2% to $4.9 billion, with lockdowns blamed for the result. The retail boss said he would have been happy breaking even after store closures during the Delta outbreak caused Harvey Norman to take a hit, while there were fears over the arrival of Omicron. But he said trade had been strong in the past 3 months. In December, white goods, televisions, and small appliances were popular, while for the first 4 months of the financial year, its bestsellers included computers, monitors, printers, webcams, due to work. We have started off very well in January, February, which is stronger than we thought, he added. There's no reason to believe at this stage it's going to change, and if it doesn't, we'll have quite a good second half of the year. And let's have a look here at just the analysis from SelfWealth. This is the exchange I use. If you sign up using my referral link, we each get 5 free trades, guys. Hey, it's $50. It only lasts a month, but it helps me with my pocket money investing. If you haven't been following the channel for some time, I take any pocket money I find. So, I sell a bit of scrap metal. I earn some crypto here. I take some bottles. I make a little bit of money doing something that isn't our primary income, and then I invest that into shares, usually trying to earn a dividend income, and this is what's helping me out. But I'm pretty happy with their platform because it's Chess sponsored too. Oh boy, the weather's getting to me. Don't worry, guys. It's not the Rona. It's just a boring old cold that still exists and still going through families. So they're trading at $5.15. Their CD, they've just announced a 20-cent fully franked dividend. We have a look here. They're profitable. We can see here who's buying it. A lot of people are selling. Some are buying. And 62% are buying as a good dividend-paying stock, while 38% are taking profits. And here are the forecasts up from $5.18, $6.11, and $7. And you can say here it's more to the buy, and most people are bullish. The ECG score, which I don't even like the idea of these things, that this is worrying, because this is woke bullshit starting to affect business. That's the danger of it. We need to counter it. We need businesses that won't discriminate based on gender or race. Good, legitimate businesses, not this type of crap. Anyway, Let me know your thoughts and opinions on this one. I'm not an investor in Harvey Norman, although they seem to be doing pretty well. What do you reckon? And how do you think people will respond to this inflation? Because that's what it is. Thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one down below. If you're a fan and enjoy the content, there are a few ways you can help out. You can sign up to YouTube or Patreon. You can use our referral links at Amazon, eBay, Independent Reserve, or AussieBroadband, or sign up with Stake or SelfWealth. Take care, guys. Have a great day. And I'll point you to this last video just about subbies getting done over by the collapse of ProBuild. Take care, and I'll see you later. Bye for now.